Do your own due diligence. Because the reality is if they're looking for a one world currency, gold has fulfilled that role for thousands and thousands of years, because it does indeed level the playing field, and it gives you purchasing power anywhere you go in the world. Because this is so much easier than going out and digging the gold out of the ground. There's an infinite amount of this garbage. There's a finite amount of this and this. There's only so much.
Gold and silver prices are firmer in midday U.S. trading Wednesday on more safe haven demand amid the Israel-Hamas war that could escalate in the near term. Notions of continued pause in Federal Reserve interest rate increases are also a bullish element for the metals markets. Lynette suggests that financial independence is the cornerstone of wealth and a key reason for global central banks amassing gold. While the definitive IMF data has yet to be released, the early returns on gold purchases by central banks show that buying was as strong as ever in September, according to Krishan Gopaul, senior analyst at the World Gold Council. Lynette discusses BRICS, the power shift to the east, particularly China, and suggests the transition might be slower than expected. While BRICS has struggled to make concrete achievements, the momentum may now be shifting. This expansion would have the BRICS overtake the G7 in total gross domestic product, with BRICS economies growing at higher demographic and economic rates than G7 members. Furthermore, Lynette Zang highlights the BRICS' rising influence with a substantial GDP share and control of global oil production. According to Goldman Sachs, BRICS members China and India could overtake the U.S. GDP by 2075. The newly expanded bloc has seen the share of its global oil supply rise year on year. BRICS now control 40.9% of the world's oil supply, exporting millions of barrels to other countries every year, according to the latest estimates from Oil Price. Russia's oil production has increased by 1.8% this year, despite U.S. sanctions. The BRICS alliance inducted 6 new countries into the bloc, and 5 of them are oil-producing nations. Saudi Arabia, the UAE, Egypt, Iran, and Ethiopia export millions of barrels of oil around the world every year. Meanwhile, Lynette suggests that the BRICS are unlikely to replace the US dollar as the world reserve currency, favoring SDRs for that role. Now, we are presenting clips of Lynette Zang's insights from her recent video. Before we continue to delve into this discussion, please subscribe to our channel and activate the bell icon for timely updates.
Want to be independent? This is your foundation, because it's your wealth foundation. It's why global central banks are buying so much. Now, a lot of people talk to me all about the BRICS and how the BRICS, the power is shifting from the east, so from the US to the west to China. Let's revisit this a little bit. BRICS, a bloc of developing countries formed in 2010, is set to welcome 6 new members at the beginning of 2024. Oh, really? Okay. Well, let's see. Who are those new members? Okay, so there's the color code. These are current members. These would be new members, and those are those that have applied for a membership. The new members include Saudi Arabia, Argentina, Egypt, Iran, the UAE, and Ethiopia. Those kind of seem pretty strategic. Saudi Arabia, because that is the reason that we retained since the 70s our status as the world reserve currency. Because if you were going anywhere in the world and you're buying oil or lumber or anything else, you had no other option but to do so with US dollars. Now that's been shifting, particularly since 2000, when, interestingly enough, the euro came into being. And that maybe was designed to take over as the world reserve currency. But technology has given them a much bigger advantage. And let's look at what happens in 2024, so just a few months away, when these new members are officially part of the BRICS. They will have 29% of the GDP, end of year projection, with the new members. That's pretty hefty. The US only has 11%, and we'll come back to that. So together, 29% of the global GDP. a lot of population growth, and the population growth in major countries like the US, like China, and like Europe, etc., population growth has been declining. So who's going to supply that? Adding high population growth countries like Ethiopia means BRICS could soon represent over half of the world's population, 46% in 2023 alone. And they already had a lot of it, but Ethiopia is the key in there because of all the population. Now, the addition of Saudi Arabia, Iran, and the UAE will more than double BRICS' share of global oil production, 43%. Do you think they can manage the price that we, the rest of the world, has to pay? The answer would be yes. That's a huge percentage. And 25% of exports of goods. So the BRICS nations will certainly have a much greater say in what happens on the world. But will they become the next world reserve currency? Not likely, because they're still more regional, and they are still about being able to easily use the members' currencies to buy all of those goods and services that we've been talking about. And it's a big responsibility to be the world reserve currency. I still do, and since 2009, I've been saying that I believe it will be the SDR because they're in the best position. But this is the US GDP. Now, inflation definitely fits into this, but the value of the United States, so this is all the money that flows through the United States, is 11.2% of the world economy. So if you're looking at the BRICS nations that have 29% of the GDP, with the US with 11%, who has more clout? So yes, I do definitely agree that things are shifting from the financial power in the East, from the US, to more financial power in the West, into the BRICS.
Lynette Zang highlights gold's historical role in financial equity and global purchasing power while expressing her preference for gold and silver. As central banks are demonstrating in 2023, trust in gold and a degree of mistrust in the greenback are underlying recent trends. And by demonstrating the most fervent appetite for additional gold and the least desire for dollars, China is leading the way in this regard. Lynette further mentions that post-World War II, the Bretton Woods system was influential, but its early 1970s abandonment led to a significant economic decline in the U.S. The first Bretton Woods system collapsed in the early 1970s, in which most major currencies were linked to the U.S. dollar, which was pegged to gold. It collapsed because of high trade deficits in the U.S., which resulted in countries losing confidence in the U.S. dollar. Let's get back to the interview.
Do your own due diligence, because the reality is if they're looking for a one world currency, gold has fulfilled that role for thousands and thousands of years, because it does indeed level the playing field, and it gives you purchasing power anywhere you go in the world. That's why I travel with them. And quite honestly, it was pretty easy for me to travel with gold and silver when I recently went to Australia and New Zealand. It was not an issue or problem at all. We got it right after World War II with the creation of the Bretton Woods monetary system, whereby the dollar's value was fixed to gold and the value of other currencies were tied to the dollar at a fixed rate. Bretton Woods was a critical reason that the US, Western Europe, and Japan experienced incredible economic booms even after pre-war levels of production were exceeded. For fallacious reasons, we destroyed Bretton Woods in the early 70s. Yeah, the US reneged on that agreement, but they had reneged prior to that by exporting inflation to the world during the Vietnam War. Since then, our historic average rates of economic growth have fallen by more than a third. The performances of other developed countries have suffered as well, because that's when we became completely dependent on debt and never ending rolling that debt over, as I've shown you a gazillion times. In the US, the public debt is now it's over 33 trillion. And so if you have to service that debt, that leaves you less wealth and less money for growth. And by the way, that is all non-self-liquidating debt, right? What we needed and what we had when we were on the gold standard was more self-liquidating debt. Not completely, but more so. We in the world would benefit enormously from a new Bretton Woods type monetary system. Let's take a look for a minute at all the different markets, and this is not all of them, this is just some of them, in which you find gold demand, because this has demand in one place, right? In the financial markets as a tool of barter. But look at all of the uses and more that physical gold has, and physical silver as well. And they've never been able to duplicate that in any lab. So it holds its value, period. I'm not saying that they can't manipulate the spot market, but why would you want to believe that lie? Why? Does it serve you well? And I'm always like, well, what if I'm right and what if I'm wrong? And when I can do something that it doesn't matter if I'm right or wrong, that is what I'm going to choose 100% of the time.
In an ever-changing global system, the continued relevance of gold and silver and universal purchasing power remains steadfast. These precious metals have withstood the test of time and offer a safe haven in uncertain times as we witness heightened geopolitical tensions and shifts in economic power. How do you envision the future of gold and silver in an evolving financial system? Share your thoughts in the comment section below. If you find this video informative, don't forget to your support towards our channel and turn on notifications to stay informed about our latest videos. See you in the next video.